Good morning and welcome to the Monday Mortgage Market Update. It's Monday the 23rd of February and the big focus remains on the Bank of England. We've got the next Monetary Policy Committee meeting coming up on the 19th of March and it's going to be a doozy. Markets are currently pricing in the high chance of a base rate cut in March, largely because inflation fell to 3% in January. That's the lowest we've seen in 10 months. However, the MPC could choose to hold rates on the 19th of March and then wait for the next drop of inflation data on the 25th before cutting at the end of the April meeting, if that data still keeps tying in. This is if they feel like more evidence is needed, and we're certainly aligned with the very cautious language we saw in the minutes of the last meeting. The Bank of England has absolutely signalled that while inflation is coming down, it wants to be sure it stays on a sustainable path and carries on down to that 2% target before easing policy sharply. So yes, markets can expect a cut, but the MPC's decision is absolutely data dependent, not calendar. And what does this mean for mortgages? Well, if a rate cut does come in March or April, then obviously trackers and variables will be affected and see a rate come in quickly. The Times newspaper reported recently that over 1 million homeowners are currently on trackers, and they will all obviously benefit from a base rate cut. Fixed mortgage rates, they've already sort of started to react. Remember, the fixed rate market tends to move on things like swap rates and not base rate news. So we've seen some lenders trimming deals, but we've also seen a few going back up a little bit. There's no expectation of large sudden drops in rates. And as for house prices, again, it remains mixed. Some indexes are pointing to modest growth. London and prime markets showing softness. Generally speaking, average UK house prices were up on the year up to December 2025, although month-to-month figures were showing seasonal weakness. And we're definitely seeing a better market in the regions, so the north, the Midlands, and less so the south. We've got falling inflation coming through. We've got energy price relief kicking in, and generally lower costs. So what are the big takeaways? Well, a base rate cut March 2026, widely anticipated but not guaranteed. Personally, I don't think it's going to happen. I think the MPC is going to choose to pause March and cut at the April meeting, if everything keeps going the way it does. So obviously tracker borrowers stand to benefit the quickest. Fixed rate markets may continue to adjust. We just don't know. But the good thing is that mortgage affordability is on the increase, and that's driving new first-time buyers into the market. I'm Patrick.weightman, your local East Midlands mortgage and protection advisor, serving clients up and down the UK. Links are in the bio. Speak to you soon. Bye-bye.